Welcome, this is John Hyman from Commercial Real Estate Online. The website to contact us is commercial-realestate-training.com. In this short training video, I'd like to talk about property management. I'll cover some of the topics in this matrix, particularly regards commercial and retail property management, and it applies in the services that you can offer through your brokerage and your agency today. So commercial property management and retail property management are both very special, and they require certain members of the team to understand the property type, the requirements of the landlords that they work for, and also the impact of the local market with income, expenditure, capital items, and ongoing tenancy matters, including tenancy mix. So let's have a look at some of these things. You should have an appointment to manage the property which is legally correct for your location, your town or city, and also have the duties defined within that appointment to act. The duties are the duties that the client requires of you as the property manager to report to them and control the property over time. That being said, the duties that will appear in an office property, a large one, or a retail property, are likely to be quite complex, and you will need to ensure that you've got everything covered. Also, from an agency or brokerage point of view, make sure that your duties coincide with the risks and liabilities that are covered by your insurance in the real estate brokerage. So from the duties, you'll have fees being defined. Now, fees form various elements of income for the brokerage. You could have a flat management fee, you could have fees from rent reviews, perhaps fees from lease renewals or new leases within the property. So all of the fees that you charge will need to be defined in your appointment to act. That being said, both of these things will be supported by some form of legal document which complies with the local documentation relative to your location, your brokerage, and the clients that you serve. So that's the appointment to act. Now let's have a look at perhaps some asset planning. After all, that's what you're there to do. You are there to manage the property. Now, asset planning actually occurs in the more complex properties that you can manage today. Asset planning involves many different things, including tenancy mix, income and expenditure management, maintenance works within the property, and also the age of the property based on the current state of repair and any other things that need to be considered as far as keeping that property operating in its current condition and in the current location. So taking that asset planning focus a bit further, now we can put some definite topics within the category, and here they are here. The anchor tenants within the property. Certainly in retail properties, the larger office buildings, you'll have some anchor tenants that are critical to the cash flow of the building. Of course, the anchor tenants will pay the larger percentage of the rental income for the property. That being said, you'll also have other things to consider as part of asset planning. That will be the capital expenditure, the larger items of a capital nature that will be purchased in the building over the period of a year, a financial year. You need to budget for those things because they cost a lot of money. Further to that, you have the ordinary expenditure that relates to the maintenance for the property as far as its performance relative to the customers and the tenants in occupancy. Beyond that, you'll have income relating to the different types of rental you're charging, perhaps net rent, gross rent. You'll also need to consider outgoings costs as part of the rental structure, and that would come into gross rental. And beyond that, you'll also need to look at the leases within the asset. They will be the leases that are coming up for renewal, perhaps expiry, or there may be some options to consider, or some tenants to move around the property. So leases are a strategic issue. You need to monitor the leases for the opportunity that they bring to you and also the challenges that they do present. So in summary, on this side of the equation, anchor tenants, the capital expenditure within the building, normal expenditure to run the building, the income that's generated from rental, and the leases, that is the standard leases and also the individual leases of each tenancy. You need to understand exactly what those leases will do to the cash flow of the property and the landlord's plans. So let's have a look at the other side of the equation. We've got relocation strategies over here. Some of your tenants may need to be relocated. That could be through changes to the property or perhaps pressures on their occupancy. Maybe they need more or less space. You need to understand that and of course allow for that in the planning aspects for the property itself. Further to this, there will be some renovation strategies Some will be relevant to particular tenancies. Other renovation matters will be in the common areas within the property, so make sure that you've got those renovation issues well covered in your asset planning strategy. Now, the specialty tenants are those smaller, separate little tenants that build around the anchor tenant. Certainly in a retail property, you'll get many specialty tenants forming around the specialty tenant. Most of the customers to the property will be attracted because of the anchor tenant or tenants, and the specialty tenants will provide support services and products and goods to match the other issues, the other things that the customers like to buy. So specialty tenants should be matched into a tenant mix strategy and various aspects of clustering within the property itself. Clustering is a smaller strategy of tenant mix. It's getting 2 or 3 tenants together that match each other so that one customer purchase in one tenant can be referred to another nearby tenant as part of that cluster activity. That being said, now let's have a look at the tenant mix topic. Tenant mix strategies are very important, and what you're trying to do here is to retain the good tenants within the property and obviously protect those tenants from any competing properties nearby that may be able to attract them away from your location. So tenant mix and the strategy behind it does require a lot of thought. What you're trying to do is protect the cash flow of your property for your client as a property manager. So beyond that, we've got another aspect here for further consideration, and that is vacancy marketing. In any period of 12 months, a property with a lot of tenants will have vacancies. Some tenants will leave, some will have difficulties in trading. Either way, you need to understand how you are going to deal with your vacancies. That being the case, you'll have some standards of rental, you'll also have some standards of lease, and you'll also have some agents that are working with you to find tenants over time. So these aspects all fit together quite well when it comes to the asset planning process. And consider that as a formal document that you would put together once every 12 months for the clients that you serve on a medium to larger commercial, industrial or retail property. The asset planning process is quite formal, and you create a document, almost like a business plan, to take the property forward. That's what it's all about. It's a planning process. So there you go. I'll finish on this particular topic today with this module. This is the asset planning module and its position within the property management activities of a professional commercial, retail and industrial real estate brokerage. Thanks for listening today. This is John Hyman from Commercial Real Estate Online. You can contact us at commercial-realestate-training.com.